you think that the Ethereum market cap is going to flip with Bitcoin, flippening, as they might say? We have in 2030 a forecast. We expect to hit $25 trillion in 2030. The vast majority of that in Bitcoin. I'd love to hear your thoughts on why ETH will surpass Bitcoin.
Okay, gold is 5% of all available assets. Dollar dominance is going to be the opportunity of Ethereum. In that world, we believe Ethereum could flip Bitcoin.
Hello everyone, this is BTC Insight and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
Cathie Wood begins by setting the stage. ARK Invest projects the entire crypto asset ecosystem could reach a staggering $25 trillion by 2030, with Bitcoin capturing the majority of that value. Why? Because Bitcoin isn't just a speculative asset, it's a global rules-based monetary system. Cathie compares Bitcoin to the return of sound money, something the world has been missing since the US abandoned the gold standard in 1971. Back then, the dollar became fully synthetic, detached from tangible backing, and Wall Street stepped in to create financial products that redefined global markets, from credit and mortgage-backed securities to derivatives and futures.
Do you think that the Ethereum network or market cap is going to flip with Bitcoin? Now, Bitcoin is at about, 2.4 trillion now, somewhere around there. And Ethereum is 540 billion. You think there is a flippening, as they might say. I'd love to hear you talk about it, but just to set this up, anyone who's listening to this podcast knows that we have in 2030 a forecast of the entire crypto asset ecosystem. And of course, we're going to be modifying this with time. We're doing our big ideas work now, but as of our last go at this, the ecosystem we expect to hit $25 trillion in 2030. The vast majority of that in Bitcoin, mostly because we look at Bitcoin as a global monetary system, rules-based that we've been missing since the U.S. went off the gold exchange standard in 1971. That's a very big idea. It's a technology, obviously, and it is the first of its kind. And we wrote a paper in 2016 on this, first of its kind in a new asset class. So those are three very big ideas. I'd love to hear your thoughts on why ETH or the ecosystem will surpass Bitcoin.
Okay. Well, if I could rewind a little bit to 1971, in our chairman's message last month, we addressed how gold versus Wall Street grew post 1971. So 1971 was when Nixon formally withdrew the U.S. from the gold standard. The immediate beneficiary was there was demand and a market to own gold. And so people would say that was your, first implication. But what we wrote about and talked about in our message was that in 1971, the dollar became fully synthetic because it was no longer backed by anything. And so there was risk that the world would go off the dollar standard. So in stepped Wall Street to create products to propagate the future of Wall Street, including, and we listed, I think, 14 products that emerged over the next decade, from money market funds to credit to mortgage-backed securities to futures, etc. And dollar dominance by the end of that period went from 27% of GDP terms, but to 57% of central bank reserves and 80% of financial transaction quotes. So Wall Street created products that made the dollar dominant, and the market cap of equities today is 40 trillion compared to 2 trillion for gold. So in other words, gold is 5% of all available assets. And so in 2025, we think everything is now becoming synthetic or tokenized, sorry, not synthetic. So as we move not just dollars onto the blockchain, which is stablecoins, but we'll move stocks and real estate, dollar dominance is going to be the opportunity of Ethereum. So digital gold is Bitcoin. And so in that world, we believe Ethereum could flip Bitcoin, similar to how Wall Street and equities flipped gold post 71. Now, that is just our working theory because I am still a Bitcoin bull. So I'm very bullish on Bitcoin. And I believe your targets for Bitcoin are actually reachable. So we think Bitcoin fair value should at least be 1.5 to 2.1 million, but we can see higher values. But that would, of course, provide upside to a neutral smart contract platform where a lot of Wall Street will innovate of real world assets.
One of the thoughts here is, Ethereum went from proof of work to proof of stake. Now, in the next 5 years, we just think about all of the creativity that is going to evolve in the financial markets around Ethereum. We totally agree with you on that. But there will come a time where we're in some kind of crisis, and then we see that the benefits of proof of work relative to proof of stake, because you're bringing in, as you say, you are bringing in a lot of TradFi and a TradFi thinking into the Ethereum world. So just wondering, if a crisis will be a moment of self-reflection and like, all right, is there a real difference between this proof of work world and this proof of stake world?
Yes, there is existential questions that'll emerge on proof of stake, but it's also, I think, going to happen with proof of work, because we know Bitcoin mining, for instance, is becoming concentrated in corporate. In fact, I think this year there was one mining operation that actually had won 6 successive block rewards, which is a high level of concentration. And as you know, as we get closer to 2140, the block reward is going to be so small that it may not provide the economic incentives to actually continue mining, which would represent greater concentration. So I don't know if at that point Bitcoin miners start to wrap Bitcoin to generate yield or other innovations. But proof of stake, you're right, is, because staking is an operational activity in security, if you have people reduce their staking, you weaken the security of the network. I think that's where the DATs are actually helping provide permanent capital. Because collectively, we are more than 3.5% of network. But SharpLink and BitMine both want to get 5% of Ethereum. That's 10% held, and a few others. So if you end up with 15 to 20% permanently staked, that is going to provide, I think, a high level of security, because we will get slashed otherwise if we're not meeting our requirement. I think we're representing a voice that capital markets can use us as a conduit. And of course, because we want both the network to succeed, and also we want Wall Street to move on to the blockchain. So our incentives are really aligned for helping sort of propel that movement.
Tom Lee and Cathie Wood both agree that Ethereum's transition from proof of work to proof of stake has unlocked a massive wave of creativity. For the next 5 years, Ethereum could become the foundation of decentralized finance, enabling traditional financial institutions to innovate faster, cheaper, and more securely. But Cathie raises a crucial point. During times of crisis, could Ethereum's proof of stake model face existential challenges? Proof of work, like Bitcoin's model, is grounded in raw computational power and physical security. Proof of stake, on the other hand, depends on economic incentives, and if too few people stake, the network could become vulnerable.
And getting more people thinking about it, just thinking about it, that's all we need, would be a boon for efficiency of the market. The markets are highly inefficient right now, highly inefficient.
Yeah.
Yeah.
It's basically, and yeah, I 100% agree, because today the equilibrium of the stock price is like, we have to take everything that you guys just said and put it into a single unit of a price. But in a tokenized world, there's equilibrium for different components, and 100%. I mean, like a Tesla, an N equal 1 company, it's very difficult for the markets to price equilibrium because Elon Musk is changing dynamically the future, but we're now having to price it in and based on deliveries of units sold last quarter.
Well, and it's also time horizon as well. Right now, the collapse in the time horizons to 1 quarter, if that, certainly in 22 and just generally because of benchmark sensitivity, has really, I think, hurt capital allocation in a big way.
Yes.
And could hurt us competitively as a nation, especially now that China is, they're not hostage to the same kinds of constraints. So yeah, this could be amazing. Can I just ask a question that was really plaguing Ethereum for a while until its recent very dramatic turn in price? And that was, it's the layer 2s that are collecting all the fees. The layer 1 is, really being disadvantaged. The network activity is falling, giving way to the layer 2s. So just to help people understand, I think it was a real question when Ether was falling relative to Bitcoin dramatically, and no one wanted to bet on it, even though these institutions were basically signing on to Ethereum. To me, it was such a big disconnect. But so now we have the term, but what about that issue?
Yeah, we have to think of Ethereum as the monetary base and the standard. So let's say I'm being really theoretical, in a quote world where the L2s pay 0 gas fees, to the L1, which is not true.
Mm-hmm.
The fact that Ethereum is the monetary base would actually accrue value to it. It's the same reason someone's saying, hey, look, we trade stocks all day and it's quoted in dollars, but we don't pay the US dollar system to exist. We'd be
right.
The fact that NVIDIA trades in the US helps the dollar. So that's why even if there was no exchange between the two, it accrues value. But of course, we know that they're trying to fix that. And so L2s want to support L1s. And of course, in the future, any bank that is going to be building on the future of Ethereum is going to be staking Ethereum as well.
In the end, both Cathie Wood and Tom Lee are incredibly bullish, not just on Bitcoin or Ethereum individually, but on the entire crypto ecosystem. Cathie sees Bitcoin as the world's first global digital monetary system, an antidote to inflation and political manipulation. Tom Lee sees Ethereum as the infrastructure layer that will power the future of tokenized finance, a world where assets trade 24/7 with full transparency and unprecedented efficiency.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.